Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's episode is brought to you by moneymetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JESSEDAY to get a $10 discount on your first purchase. Today's guest is an expert in the metals and mining space, a former member of the precious metals team at Sprott, and the founder of Feneck Consulting. Somebody I always like talking to. It's John Feneck. Welcome back to the show.
Thanks for having me, Jesse. Always a pleasure.
So before we hit record here, you were mentioning some short positions you had, particularly in 4 international ETFs. So I wanted to know how those positions have worked out for you, because you've alluded to short positions in our previous conversations. So I'm very curious about that because it's not often discussed. And what were the signals you saw that showed you these would be good short positions?
So we have always been skeptical certain parts of the world, and it's an easy way to play that theme through an ETF or mutual fund, right? Because picking individual stocks overseas is very dicey to short or buy long. So we started to short international when we saw the Fed flip flop and start indicating they were going to raise rates. Obviously, that was January of last year, right? Then you had the Russian situation happen, I believe, mid-February of 2022. We got much more short then, especially like parts of Europe. That would be EPV, which is the double short Europe. And then we've always disliked emerging markets, even though Lynn Alden and a lot of people that are out there, at that time were talking up, big, emerging market positions on the long side. We were taking the short side because I've been in international for 30 years, right? I started in a global fund as an analyst. So I understand the international markets pretty well. And I basically looked at that and said, look, emerging markets are like the most risky part of international, right? Like it's not like the EFA where, it's going to be more larger cap and higher quality names. So we've been short emerging, which has worked out beautifully since January, February of last year as well. Now, there's 2 ways to play that. That's EUM on the single shorts. And I use EDZ, which is the triple short, because I have the ability to look at the screen every day. You have to be careful with anything that's double or triple short, Jesse, because of the time decay on these ETFs. You can really get smoked if you're not careful. And so I highly recommend people to talk to an advisor, before they do any of this stuff on their own, to make sure that this is going to be an appropriate, type of strategy for them. But, the EFA is a nice one because it's just a large cap index to go after, right? And EFA is EFA if you're long, EFZ if you're short. That's the single, okay? So we've talked about 3 areas right there. That's probably what I would say is a good starting point, for investors to look at. You can also look at China. I mean, China is the 4th one I mentioned to you off camera, and that's very difficult. FXI is the long single. The triple short that is Yang, YANG, and that is extremely volatile too. I mean, yesterday you saw China, ease things. China rallies huge. If you're triple short, you're down 10, 11% yesterday in one day. That's why I'm saying these things are hot potatoes and you have to be really careful. But we just think there's structural problems in China on the real estate side. We think that when you have a GDP where they're at, it's pretty attractive, but it has further to fall potentially too. So that's an area we've made a lot of money in shorting China since, the 2008 crisis. I started to go long in 2007, short in 2008, 2009, and I've been playing that market for 16 years.
Fascinating. Now, I wanted to switch to the debacle that's going on with the long duration treasuries falling off a cliff recently. It now looks like the chances of the Fed raising rates further has been reduced, partially in connection to what many are calling the collapse of the long duration treasury market. Would you agree with that sentiment? Could we actually see them pivot and start cutting rates perhaps sometime next year?
I think sometime next year, absolutely, but it's not going to be as quickly as people would hope, including myself. So, as I've said on your show a number of times, I have every reason to want for a cut for November 1st, right? Like, let's get a cut. I'm perfectly positioned for that, but it's not going to happen. There's a 99% probability of no movement at the November 1st meeting, right? So I think the meeting November 1st is just a nothing burger, except for watching the 2:30 p.m. Eastern comments from Powell, because that's extremely important, right? You want to get the ability to read those tea leaves going into the December and January meetings to see if the Fed is still holding true to their September 20 posturing, which was, if you remember, 12 of 19 members were saying we want another hike in the next 2 months. So December right now, as we sit here today, it's still a live meeting in the sense that there's a 25% probability as of last night that the Fed's going to go another 25 basis points on December 13th. So January looks even more potential. It's 31% as we speak. So I don't think they're off the table yet, as much as I would like them to be. I think the market is positioning, Jesse, for a what is called a dovish pause as opposed to a hawkish pause, right? We got a hawkish pause in the last couple of months. We want to see, hey, we're done, right? Like that's what everyone's hoping for in the broad market, in our sector, et cetera. But before we get cuts, remember that no member has said we're going to cut in 2023. So I don't see any cuts coming in the next two meetings. And it's hard to really look out past that because the Fed is so data dependent.
Well, let's shift to the conflict in the Middle East, which seems to be intensifying. The US hinting at potential war with Iran allying themselves further with Russia and China. How could a spread of this conflict impact the commodity space in particular?
Yeah, and I just wanted to say on the onset of this that our hearts and thoughts and prayers are with the Israeli people. It's a terrible thing. I lost four friends in 9/11 in New York City, and to see people at a music festival, right? Just using that as an example, October 7th, where you're trapped and people are parachuting in with automatic weapons. It's like got to be the most harrowing kind of experience ever. And so all of these people, I wrote about my newsletter, these elite type universities, like people at Harvard, like Josh Malone, or some of these people talking about pro Hamas stuff. You better educate yourself before you go out there and go out on a limb. I have a client in Tel Aviv. I've got someone in the Israeli forces that I have as a client. I get information that isn't necessarily being reported, accurately on some of these larger websites in the U.S. So I do believe that things will escalate, unfortunately, as we speak right now. I hope that we can find some way to peace. But when you look at Biden's State of the Union Thursday, man, he mentioned Poland, he mentioned Taiwan. I was like, what? I mean, this is not stuff that I've heard him talk about before. I mean, I don't watch him regularly, but man, that's we've got two conflicts ongoing, Jesse. Right? We've got Russia, Ukraine. That's where I mentioned Poland. We've got China, Taiwan, which no one seems to talk about anymore, but very active potentially for next year or the year after. And that would put us into three different situations. Obviously, we would be backing Taiwan. And then how does the economy not get into a recession, right? Like, I mean, we've been talking about a recession on your show for the entire year, and we walked it back in May, like David Rosenberg and so many other smart people did this year. But we've always said, like, it's going to happen in 2024. It's just a matter of getting there, right? Like it's not here right now necessarily, but it is coming, and you have to prepare your portfolio for that likelihood, in our opinion. So, to your point, let's just look at gold. How did it do following the Israeli, situation? All right, October 9th, when the markets opened, gold popped, right? It kind of faded the 10th, 11th, and 12th, but on the 13th, it had its best single day since the pandemic, up 3.2%. That's real buying. That's not just short covering. Some of it is short covering for sure, but like it's not just short covering. It's more billionaires and more high net worth investors saying, wow, I need to protect what I've earned since March of 2009. And one of the ways I can do that is by buying hard assets. So to answer your question, I think the commodities complex is well positioned here. I think certain areas of the commodities complex, like gold and silver, could do better because they're considered, precious metals as opposed to industrial metals.
Well, let's touch on the energy space here. Obviously, something that could be impacted if, a conflict with Iran intensifies. Lindsey Graham has already suggested bombing Iranian oil refineries. I'm not sure if it's going to come to that, but pretty tough talk. So, aside from that, though, fundamentals still look very strong. Are you deploying capital in the energy space now or sitting on the sidelines?
We're not on the sidelines. We run an energy portfolio, but I haven't been adding money hand over fist. Like I went in heavily into gold and silver stocks on October 9th and that whole week. And this week, last week, the 16th, no different. This week, no different. I'm just buying whatever I can get that's cheap on the gold and silver side because I do believe things will escalate, unfortunately. Oil, at 83 bucks WTI as we speak right now. It hit 95.08, I believe, as the year-to-date high, if I'm remembering correctly. So I think you could easily test that high and break through it in any type of conflict, right? I mean, like there's a lot of analysts out there over 100 a barrel. So there's obviously upside there. We would say that we're more interested in playing the clean energy stuff and the uranium space right now than we are just pure straight up energy. But the way to play that for us traditionally has been XLE, which is the larger cap, oil stock ETF.
Yeah, that's my main position as well in the energy space. So let's talk about gold and silver miners then. You said you've been deploying capital aggressively there. Let's talk about gold first. So are you looking at the juniors at the moment, the more mid cap, the bigger producers? Talk about your trades there and where you're seeing opportunity.
Yeah, if I didn't have such a big position on GDX already, I would be adding to GDX, under 27 anytime I could get an opportunity. It hit like into the 20 high 25s, I believe, on the recent low. 26 to 27 was a support level we've been talking about all year. It barely got through that on the bottom side and then just bounced all the way to 30. 30 has been kind of a round number, resistance level. But I think it touched like 30.13 in this recent move. So if it gets through 30 to 30.13, you're going to see 32 to 33 pretty quickly, I think. And so we're just holding, Jesse, our larger cap stuff right now, unless there's just a special opportunity during earnings season where something just cranks, and then we'll buy that individually. But we're focusing a lot of our attention, as we have since July and August, on the junior space because it is so bifurcated from not only the large cap gold and silver names, but also the price of gold. I mean, look at gold and how it's done this year. I get a lot of complaints from investors, just normal stuff like, hey, why aren't these gold stocks doing better? Look at gold or like, why isn't gold at 2,300 or 2,400 given the backdrop we have? And these are logical questions. I mean, we should see a higher gold price, but it's taking some time because of other headwinds. Other headwinds could include the Fed's just kind of like hanging out right now. They're not decisive, right? If the Fed was like cutting rates, gold would be at an all-time high as we speak, no question. But we're not there yet. So we have to kind of read the tea leaves, follow along. But, I would say, as you know, I've been very pragmatic about gold on your program for the last 2 years. I said in January that when we got together at VRIC, I said it would hold that 1800 level. It did. That was around January 29th, if I remember. And then it bounced all the way to 2050 plus, right? So now we're starting to see that same type of price action play out. If you look at what happened just before Israel, we got to around 1820-ish, and then it bounced, right? And again, that 1790 to 1800 level we think is going to become a higher low unless something, a black swan event happens and there's a liquidity event. But to answer your question, I think on the gold stock side, we like Serato. They've put out some really nice numbers recently. CRDOF. And it popped into the mid 55s about a week ago, and now it's settled back down to 49. But I think Mark Brennan has a really good understanding of how to get money together for meeting their capex. Right, a lot of times in this sector, Jesse, you have a great game plan, but you don't raise enough capital to execute the game plan. Mark comes from a capital markets background like myself, so I have a lot of confidence in what they're doing there. And I should mention also, I visited one of his other companies that he runs, Ascendant Resources, which is ASDRF, just last month in Portugal when I was overseas. And let me tell you that is a really interesting project for a 6 cent stock. I mean, it is below 6 cents US right now, which is hard to even say. But when you go out to the site and you see the potential and you see how many jobs they're going to be able to create for the local community, they don't have the pushback that we see from other parts of the world, right? Like, I'm not saying that First Nations isn't correct in trying to do what they do with a lot of our companies in this sector, but also, it is an overhang, correct? I mean, like, you have massive delays at a lot of juniors because of not only that, but then it's permitting, there's strikes, there's roadblocks. It's like none of this exists at Ascendant. Like, I was very impressed with the local team. I met with the mine manager and the president of the Portuguese operations, and they told me straight up, hey, the Portugal government wants this, Okay, great. I mean, that's what you want to hear as an investor. Then you also want to hear, what's your path to production? Well, we're going to be able to produce by, Q4 of 2025, most likely. That's 2 years from now. So for us, like, yeah, we're going to put money in that. You're probably going to start getting some more bids as you get closer to that production point, right? Like any stock. And what if they don't want to do it themselves? Well, they'll just sell it to someone for a huge gain, right? So it's like there's a lot of upside in these little juniors in the gold space, and so those are two.
Well, let's switch to silver, because before we hit record, you were mentioning how silver is one of the most difficult commodities to forecast. Obviously, there's a lot of hyperbole out there. People like to talk about $50 silver or beyond. Um, what's your current outlook on the silver space, and how are you deploying capital there?
So yeah, silver is very challenging. It has been for a couple of years now. It really popped after the March 2020 lows, and we went triple silver April and May of 2020, and that's been a great investment for us. But we haven't sold any of that, and we haven't bought more, Jesse. So we came really close to getting filled at 1750 an ounce last fall. It got to around 1760 ish. I wish I had bought that. But we're buying silver equities right now mostly because we do think silver will retest that 25 to 26 range. That has been problematic for many months now. So once we get through 25 to 26, hopefully 26, that will bring in a test of roughly 28. And then you're going to have major resistance at 30, right? That has failed a number of times over the last few years at $30 an ounce. But if we crank through 30 with any strength, that's when you're going to wish you had been positioned right now, because these silver juniors are going to surprise you to the upside. One that comes to mind is, a silver producer like Silver X, right? They were a darling. I talked about them on your show before. Very impressed with the people. When you go to these dinners and conferences, you always want to look around the room to see who you're with. I mean, the last time I hung out with them in March, we had Adrian Day, Brian London, Chen Lin, like all these guys are in the stock. At least they were at that time. And you're like, wow, that's encouraging, right? Because they've been doing this longer than I have, and they're loving the story, right? Well, they had a hiccup this year. They were going to go after an asset in the U.S. It didn't work out. They raised money around that. That depressed the stock price. Obviously, it diluted shareholders. But then September 19th, they said, hey, we've taken a look at our operations. We restarted production. We're coming at this more lean and mean, and I think they're going to produce a really good quarter here. So we like AGXPF, especially if silver prices keep escalating. You've got leverage to the price of silver in a stock like that, right? Because they're producing currently. Another one that's probably got news here. I mean, I talked to the CEO last week, and they've been talking about this since their September 12th press release, when they released their MRE, their mineral resource estimate. They basically, it's called Silver Tiger. SLVTF. And I haven't talked about this one before because I've just gotten to know Glenn through a couple of conferences recently, but very confident CEO. They're based in Mexico. I think they have 7 analysts, which is really unusual for a junior, trading at 14.2 cents, right? Like, I mean, 7 different analysts is pretty strong. And that's one of the things you also look for, Jesse, right? A lot of juniors have no coverage, maybe one analyst. What happens in a silver rally to 28 or 30 when you have 7 analysts talking up your stock? That's huge. So I'm waiting for their PEA to come out. on their Mexican property and see what that looks like. But if it's anything like their MRE on September 12th, I think it's worth buying right here. And lastly, I'd say Aftermath Silver. We talked about that on your show before. I think we talked about it around 17-ish, and again at around 11 cents. It's trading at 14 and a half right now, right in the middle. But they have their metallurgy results coming out this quarter. I don't know when, but again, you don't have to wait. They're definitely going to have it before U.S. Christmas, right? So you're looking at 2 months. Who cares? It's like buy it now, 13, 14, 15. It doesn't matter. It's going to much higher prices with the amount of silver and manganese they have in the ground, in my opinion.
Well, let's talk about uranium, something we also like to touch on when we have you on the show. Is there any opportunity you're seeing there at the moment? Obviously, the spot price of uranium now at 15-year highs. It touched very recently. A lot of the equities saw price appreciation over the past few months as well. Where do you see the sector, and are there any stocks you're watching there? I know we've talked about a few in the past. Maybe you could update us.
We talked about uranium on one of your shows, either this or VRIC, in August. I'm 100% sure. And I talked about Forum first because I had called the price insane, which, for me is really going on a limb. But when you see a stock on a 3-year chart that's gone from 47 cents to 4 cents in a sector that's moving up, you got to say to yourself, like, what's my downside risk here? It's not going bankrupt. Rick Mazur's been in the business 40 years. So it's like, okay, I'll take a flyer on it. When you looked at the news, which I pointed out to your investors and followers, they raised almost 5 million Canadian earlier this year to drill. So in August, the results weren't out yet, right? In September, we saw that they made a new discovery, which is huge. So the stock went from 4 cents to 15 cents in literally a month. And that's the upside, Jesse, in the junior space. This isn't going to happen all the time. But Forum's got a really good following on social media, and they do a good job of putting regular news out. So, Dr. Hunter and Rick have done a really good job of informing the market about what's happening. And will they need more capital? Yeah, everyone in the junior space needs more capital. If you look at what happened recently with Denison, they did a raise. You look at Uranium Royalty, they did a raise, right? Like, all these companies need more money. Why not raise here in a stronger market, take a little bit of a hit, but then you're so positioned for 2024. So I really like FDCFF still. To update people on where we were in August, we were long URA. We still have a position there, but it's decreased because it got ahead of itself on an RSI basis, relative strength index. The whole sector really did, right? I mean, there was a point where all of these stocks were trading at 78 to 85 RSIs. Anything over 75 is a kind of a caution. And then over 80, for me, it's almost always a sell because I know people are watching those levels. And sure enough, the market really did pull back a little bit there. People started to do financings, but we still own URA, we still own DNN, and a few smaller names.
Excellent. Well, I'm going to be interviewing Rick Mazur and Dr. Hunter coming up here on the channel so people can get a more thorough update on them. Before I let you go, where else are you currently looking for opportunity in the market? Any other commodities or even places outside the commodity space? What do you think looks attractive at the moment?
Yeah, so we've talked about Transition Metals on your show before, just as a company that provides a lot of value at these prices. It's trading at 0.044 cents US. Rick Rule owns almost 10% of the company, like 9 point whatever, right? I mean, so that's a huge endorsement right there. The company's share structure is probably one of the reasons he's interested. I haven't talked to him about this, but when you look at the share structure, it's just over 50 million shares out, and there's hardly any warrants or options as far as an overhang at all. So, Scott McLean and his team have done a great job over a decade plus of not diluting shareholders. So that's one that I think has upside in a better commodities market, right? Because they're invested in parts of 20 different projects. So when you talk about a project generator, which is their model, it's not the most attractive to a lot of investors because they're not drilling, and having exploration results left and right, right? So it's not that same kind of massive upside. However, it's a nice conservative play in a portfolio. Another one that we like is Platinex, which is a new name for us, PANXF, because I met with Greg and his team at Beaver Creek, and they were talking about, hey, we've got some uranium exposure here. We've got some nickel and PGM exposure at our larger project over here. We also have Shining Tree, which is a gold project in a great jurisdiction, district scale gold project, and they have a royalty portfolio. So when you look at four different things, again, that's very attractive to value managers because at 2 cents US right now, how is it going like much lower? I mean, yeah, maybe a penny, penny and a half. So you take 25 to 50% downside risk for hundreds of percent of possible upside in a better commodities market as we enter 24, and 25.
Well, John, thank you so much for joining us today. As always, it's an enlightening conversation when we have you on. For those who want to learn more, could you tell us about Feneck Consulting and where people can contact you about that?
We had our best subscriber month ever in October. A lot of people that have been following me on your show and others said, hey, I watched your stuff for the last 6 or 9 months, and have reached out, which we're really thankful for. We think this is the time to do that, right? I'm a very reasonable guy. Like, our prices are our prices on the website. But if you come to me with your personal story and say, hey, I'm just getting my foot wet in this sector. I've got 25K or 50K or whatever it's going to be. I'm willing to listen and try to work with you around, finding some type of service that meets your needs, right? So we have our newsletter. We've got our real-time macro updates, which we think are awesome because, we wrote something, 2 paragraphs on gold and other things right after Israel on the weekend before the market opened, right? Those are very timely things because, again, if you're able to buy gold based on something I've written or anyone's written, right, and not wait for a newsletter for a week, you're going to get a huge mover advantage on the market. And that kind of stuff really matters, I think. So, so we're open to anyone taking a look at what we're doing. We just posted our September 30 numbers. We're over 6% ahead of GDXJ year to date, and we're proud of that. So please visit us on fennecconsulting.com.
Great. I'll put a link to that in the description below, as well as your email for people who want to contact you about that. Thanks once again, John, and looking forward to the next conversation.
Me too, Jesse. Thanks a lot.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get $10 off your first purchase. Link is in the description below, and I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.